Reward everyone who showed up on time and a bit early. Thanks to everyone for attending. Um, this is our, I guess, technically Q2 now, huddle. Usually we try and do one of these a quarter, and we're focusing this one on RevOps. So I want to thank all of our panelists and for everyone who's joined as an attendee so far. Today's topic is scaling sales beyond founder strategies for VC and PE-backed growth. I'll get a bit more into the specific subtopics we're going to look at, as well as why we chose this topic and why we have our panelists here in a couple minutes here. But we have an hour. Feel free to submit your questions in the Q&A feature here in Zoom throughout the meeting, and we'll leave some time at the end for questions. So yeah, please do that. We do these huddles for a reason. We like them to be intimate, even though you can only see the see the panelists here, but feel free to put stuff in the Q&A chat. Want to remind everyone that this is being recorded. It will go up on our website in some way, shape, or form. You can also find the other prior huddles we've done on our website, as well as other resources for founders and growth stage companies. So first, I'd like to introduce our great panelists, who I want to, again, thank so much for taking time out of their days to lend their expertise. I'd like to ask each of them to do a minute or two introducing themselves and what makes this topic meaningful to you. Richard, would you like to start?
Yeah, sure. Thanks, Kevin. So yeah, Richard Smith. I've had a couple of decades now working within a growth and scale up startup environment. But to start with, I actually worked within a professional sales environment, and so all through my career, I've seen the sales role as a highly professional role, and it's often done by lots of different people. So we've been discussing the challenges of how a business goes from being kind of a group of people that are taking great products and service to market into something which is what I call a semi-autonomous engine of growth, which is that sales team. So I think it's a really pertinent challenge across the growth stage, how you ratchet that up. So yeah, I'd be interested to chat to the guys about their experience in this space.
Awesome. Thanks. Gotham.
Perfect. Hey, everyone. Nice to meet everyone. Gotham Rishi, based in London. Yeah. So co-founder CEO One Shot. So we're an AI outbound platform. So we're about 3 years old. Gone through 2 rounds of funding, currently raising our Series A. We remove all the manual work of outbound, specifically around research, messaging, but we've actually added a human element to this because obviously there's a lot of noise in the market and results are an issue. So we actually combine AI agents alongside humans to actually deliver performance and results that will actually make a considerable difference to the business. Prior to this, I'd spent the last 20 years in B2B software, the last 12 years building scaling teams. So I headed up EMEA sales for a company called CloudBees, was with them from 10 million in ARR to 120 million. CD networks are typically working at scale ups from anywhere from $1 million plus in revenue up to 50 to 100 million. Akamai ran their EMEA operation. So yeah, and at One Shot, we've gone through that journey of founder-led sales from 0 to 1, learning product market fit, scaling. So yeah, super excited to speak to everyone today about that.
Thank you. And then Sabrine.
Hi all. Look, it's a pleasure to be here today. I've worked nearly also 2 decades in finance, both on the buy side and the sell side. Over the last 10 years, I've been focused on venture investing with an interest in emerging technologies. These days, I spend a lot of time on AI and digital assets.
Awesome. Thank you all again for joining. And yeah, I think we really have a great variety of perspectives, both from the operating side as well as the investing side. Because at Marion Street Capital, we typically focus on companies that are venture backed or trying to be venture backed or getting to the growth stage in private equity. So this topic's maybe more towards the early stage and kind of the 0 to 1 or kind of 1 to 10 area, and in the age of AI, maybe even a bit steeper than that. But just looking at the 6 topics we're gonna kind of go over today. First, we're gonna start out with when do you actually look to transition from founder-led sales to building out a sales team, um, hiring, kind of everything associated with that, process and playbooks. How much do you actually operationalize or crystallize this stuff? You see a lot of startups here these days growing very, very fast. So what's the focus there? How can data and technology support that growth, especially as you have limited funds as a startup or growth stage company? And Gotham as a founder as a founder of a company in that space, will have great expertise to lend, and Richard having worked with companies, and Sabrine looking at a number of companies. And then the investor expectations side, Sabrine specifically will say, what do PE and VC firms really look at in scalable sales organizations? And then finally, a lot of startups fail, especially after raising a seed or Series A round. So what have our various experts learned in seeing companies both successfully and maybe from an outside angle unsuccessfully do this, and what kind of pitfalls can they avoid? And as I mentioned, Marion Street Capital, we work with startups every day trying to solve these sales challenges as well as the funding challenges. My name is Kevin, and I'm happy to connect with folks after this. So with that, I will stop sharing my screen so we can get into kind of our core discussion here. Starting out with when you actually transition, both directly and indirectly, how do founders really know it's time to take a step back from doing direct sales? I guess Gotham, you want to start with that? You spent your career kind of building sales organizations and now doing it yourself as a startup founder.
Yeah, absolutely. And I've learned this. Everything I talk about, I've learned probably the hard, painful way of doing this as well. So like as a good example at One Shot, when not to do it, we was kind of pre-product market fit. So I think as it's kind of the founder's role, pre-product market fit to own sales, own those first 10, 20 customers, however many customers it is. We didn't do that as an example. So we actually hired an enterprise AE when we had good revenue growth, but not PMF. So what that meant was we actually were not quick enough in pivoting. When we faced churn, we were relying on the AE to make those changes. The feedback that was going back to product wasn't good enough. So we actually lost, I would say, 6 months, even longer, maybe a year, by hiring an AE too quickly. I felt that it was needed because it would take a lot of, we were growing so quickly. We were already in a Series A discussion. From an investor perspective, at Series A, they want to see that you've moved away from founder-led sales as well. So we made that kind of mistake of thinking, oh, we can speed this up. So own it until it becomes a repeatable, scalable process, which is typically PMF. So understand what the first meeting looks like, what the second meeting looks like, make sure that they're happy customers after 3 to 6 months. 3 months is good enough. But yeah, I would say absolutely, until you can repeat it, do not hire. So own it as long as possible is probably the short answer.
Great. And Richard, you worked with a ton of companies kind of in that stage. So would you say that mostly aligns with what you've seen? And what
I mean, obviously there's some sort of, like flags that will start to show, if you become a bottleneck, then you've got to get some resources in, right? You've got to, but then I think that there's a litmus test there as well, is can you document the sales process so that you ideally would follow in your go-to-market strategy. Can you articulate your ideal customer profile and those sorts of things? And if you can do those things, you can then onboard somebody to be successful. But if you're unable to do that, you sort of got to recognize you've got to get somebody in who's got to be really entrepreneurial and like very collaborative, and isn't sort of just a sales like an AE, like somebody's out there just wants to make a ton of money, but is perhaps more interested in being almost like not a salesperson, but more like a founder's assistant in a way, that can do some of the smaller stuff and can pivot and have a conversation. So if you're not at that stage, then yeah, I would. So if you can describe what your process is, then you're in a really good position to bring people on. So that would be the couple of things. Are you a bottleneck? Yeah. And if you are, can you describe your process? Can you repeat it regularly?
Great. And then Sabrine, from your perspective, what are the risks or challenges with either trying to transition too early or too late, and how that ultimately affects kind of the growth expectations you have as a venture partner?
So Gotham and Richard, I think, contextualized a lot of the risks, but I'll summarize that. But from my perspective, certainly timing is everything when it comes to making the right decision on when is the right time to transition. Otherwise, there are going to be some consequences or risks. But from my perspective, and maybe this may be controversial for the other panelists, but I think the founder should always be involved in the sales process to some degree. The question is, when is the right time to just productionize that process? And that maybe slightly depends, on the different client segmentations that you have, whether you're looking at enterprise or SMEs or consumers. It may be easier to repeat and automate some of those processes than others. But at a high level, when is it the right time, or what's the risks with transitioning too early? As has been discussed, in the early days, where the product's still being either developed or improved, the founder knows a lot about the market and the customers. And so having that expertise is invaluable in driving the sales process. And removing it too early can lead to performance issues. And then also, if you transition too early and the new sales team may lack sufficient understanding of the USP of the product. And again, the founder guidance there is critical, and the sales strategy may become either inconsistent or poorly executed. Generally, in the early days also, the founder will have quite special and strong relationships with these early clients and customers. And removing the founder too early may lead to increased churn. So, and then maybe lastly is burn rate. So the burn rate also is an important consideration of the timing for some of these considerations. It can be quite expensive to build these large teams. On the other hand, if you're just too late, what are the issues? As Richard mentioned, bottleneck is really the key one. The founder, has this important role to play, but eventually there are other roles that he should play. So having the team support him is critical, and being able to have sort of an effective sales team support him is important. Without formalizing for the sales process, the team can also lack direction and struggle to identify these opportunities, and being able to capitalize on key customers. And maybe the last one to call out is just the lack of delegation, perhaps depending on the team and where you are in your journey, can lead to sort of lower morale and the team not feeling empowered to be able to execute on the growth strategy of the business. So those, I think, would be sort of a few considerations, but ultimately also the market timing and the market conditions also can play an important factor in some of these decisions. So if you scale, too early, too quickly, and the market's not behind you, that can also be quite detrimental to the growth of the business.
Great. Yeah. And then I think this next one pertains to everyone, but we've seen a number of these AI first startups scale to massive amounts of ARR very quickly, using just the example of ChatGPT from last year or 2 years ago when it launched. They got 1 million users in 5 days, I think, with their most recent launch of their newest product, they got 1 million new users and 1 million additional new users in a day or a few hours. So that obviously transitions to some form of ARR, but we're seeing teams, I mean, ARR grow disproportionate to the growth of teams. So does that impact the timing of when founders should consider building out sales teams? And sure, Gotham, you could provide input since One Shot is building some autonomous processes into the sales process. Or how much are you still worried about just hiring and operationalizing your processes to scale that ARR?
Yeah, I think there's definitely, probably in the last 18 months, there's been a big shift to revenue per full-time employee and focus on that compared to what it probably was maybe 3 or 4 years ago. I think it was, we've even from a growth metrics, headcount was a super important metric, which it is still now, but I would say that the new trend is, especially with, you look at Lovable and Cursor, some of these, I think, is it Cursor just hit what, 30 million with 20 employees or something insane. And I think there's a lot of AI agent first companies talking big numbers as well. So I think we are now entering this era of focus on revenue per employee, revenue per full-time employee, and now using AI agents. I don't think AI agents are there to fully replace the human yet. So I think however great the pitch is and how we can replace this person and completely remove that, I don't think we're there yet. It can remove a lot of the kind of manual tasks. So I think where we're seeing a decrease is maybe taking a hit on some of the junior level roles, so content creators, SEO, the SDR role. We're seeing those team sizes in companies just drop significantly. So obviously, we don't claim to replace the SDR function at all. We will claim to improve it alongside humans. So what we're seeing is content creators, SEO teams, SDR teams, we're just seeing huge drop-offs. So people are hiring less for those teams. Companies, when looking to grow those teams, they're actually looking to reduce spend. So I think it really depends on the function. Where we're seeing certain sales teams increase in size, they want to get more people in front of customers. So I think where you can use AI to remove the manual work and tasks, is you should absolutely deploy it, implement it as quickly as possible. We're growing in the last 6 months. We've probably grown faster than we have. Our customers have been happier, and we've not added a single person to the team, and we've actually felt less stress and pressure. We have brought in external fractional helpers where we've needed to. So actually we're increasing the business through fractional versus full-time to solve certain problems within the business. And that's actually been working really well for us. Again, we're a small company. We're not a large enterprise. So it's a different model, but for us, that's worked really well.
Richard or Sabrine, any additional thoughts there?
Yeah, I'm happy to. Yeah, I think we need to be careful not to confuse product-led growth, where the product is just selling itself, and we can see the business doing incredibly well because effectively the product just sells itself, right? With driving a sales process through technology rather than growing a big sales team. And so on the latter, where I think the majority of organizations are, where they're still looking for a level of product market fit, it's still competitive, and they're not truly differentiated. There is a challenge around getting their value proposition out and building out a pipeline and closing deals. I think it goes back to that point about can you articulate a repeatable process, because ultimately the technology does really well where you have got that highly repeatable process, and you're not still looking for, if you like, you need the ears on the ground, hearing the customer's feedback, dealing with the objection. There's still a lot of personalization in the sales process, be it from outreach or through, building out value propositions and negotiation. And I think at that early stage, before the growth Series A stage, we are talking about needing to be a little bit measured around. So yeah, things like outreach can be quite quickly automated because you can know who you're going to after. But other things, there's tools out there you could consider. I wouldn't overload the stack base quite so quickly, I say, until you really are clear what it is that you're automating.
Yeah, no, I agree with the comments, Richard. I would say that we're still also quite early in these sort of agentic AI journeys. So I think they're great technologies that we can certainly look to optimize a lot of the sales process when you already have a repeatable process. But a lot of the fundamentals of how you build these sales teams and how you refine the product, I think still are, the prevalent approach, at least for startups currently.
Great. Yeah, so I guess we're using your basic SaaS startup as our example here. And as we're looking at actually building out and hiring in this age of AI, as we've just touched on, hires can be more critical potentially, even as you're hiring less people to get to the same goals you would have previously. So Sabri, maybe we'll start with you on this one, but what qualities should founders look for in their first sales hires?
Well, so I'll defer to Gotham on this one since he's probably a bit better placed. And happy to add in a few comments after.
Yeah, actually, Richard kind of touched on this earlier, and it was, really valid point. It's almost like this founder's assistant, where I think if you look for a traditional, I've built and scaled scale-up teams where, revenue's already at 10 million, 20 million, and you're looking for the best enterprise level AEs out there, people who understand complex sales processes, sales cycles. They're used to earning 100K paychecks, commission checks, working with large enterprises. A startup is absolutely, you're miles away from any of that. So if you're used to, and you have a set infrastructure in those organizations, you have pre-sales, legal, RevOps teams, marketing teams, inbound leads, there's a lot going on. In a startup, it's a very agile team. There's lots of pivots, there's lots of product deficiencies, there's lots of messaging challenges, there's no fixed process, everything changes, competitors come along, you're shifting the business a lot. So hiring a senior enterprise AE who may have Salesforce on their CV or SAP, these great companies, they're probably not a great fit for a startup at all. They're used to having a lot given to them, a lot done for them. They're very great at big, complex negotiations, running really complex processes. A startup's not that. So you need almost that entrepreneurial spirit, someone who wants to, obviously earn money, but be part of a startup, be part of touching multiple parts of the business, from sales, marketing, product, legal, HR, finance, funding. So they're very much their part of the journey. The payoff of it, the upside is obviously there, but they're someone who they will probably become a startup founder themselves in the next kind of 3 to 5 to 10 years. They're very entrepreneurial. They've probably wanted to start their own business from an early age. They're very keen on being hands-on with the founding team as well. So I think having that high entrepreneurial spirit, I think Richard described it well, this almost a founder's assistant. They probably wouldn't want to be called that, but like it almost is that type
Founder's apprentice maybe, or founder in training.
Yeah, and they still can't be too junior, right? Because the thing would be, okay, I can find someone, but you still need someone who gets it, who understands, they're credible in front of customers. You can't, as a founder, you can't hold their hand too much as well. So yeah.
So for this founder's assistant, I think that's the qualities that's been described are great. I think the other point probably to add is the compensation. So for the, the first sales hire, a lot of it is going to be on ESOP or having the right incentive, make sure they're aligned with the strategy of the business. So that's always an important conversation also to have.
Yeah, on that point, Gotham or Richard, do you find yourselves, I mean, there's tons of data from like Carta or anyone else out there is, hey, this is how much equity, this is roughly how much base salary, like you can get that data anywhere, but are you typically implementing anything like wildly different from that to incentivize your early hires?
Gotham's probably got a bit more.
And maybe you don't know the data by head, so
I
that
would
might be a bit of an unfair question, but
I would expect a higher sort of a higher commission base and potentially equity at the earlier stage you are, right? And as you go on, as you mature, you want to reduce the, you know what a salesperson's capable of doing, so therefore the upside doesn't need to be quite so compelling, and you don't need to give away your business at that point because it's quite a safe place to be. So that would be my sort of balance.
Yeah, I think it's fairly in line. I think because obviously these early stage hires, most of the equity in that kind of options pool is typically going towards senior hires plus engineering, obviously for SaaS businesses. So your early stage sales hires, it's in line. I think it's between 0.1 to 0.5%, depending on the seniority, what they're doing. And then probably heavier on the compensation. So obviously the base salaries are not going to be necessarily in line with the market, but the compensation will be over. So typical enterprise maybe between 7 to 10% commission. So you're probably going nearer to the 15% plus commission on a deal. The other thing is, I think coming back to the earlier point, is there isn't necessarily the consistency of earnings, where if you're in a more established business, you may get that 5, 10, 15 grand commission check every month. In a startup, it's not as consistent. So you may have a good month, they'll earn some commission, and maybe they don't earn commission for a few months either. So it's aligning their compensation to the company goals as well. So you may sign that customer, but if you're still product market fit, they may churn in 3, 6, 9 months. So you might not necessarily be signing these long-term contracts. So building compensation into things like meetings booked, number of first customer meetings signed, other areas where they can also earn some good bonuses, good commission that might not be aligned to just the ARR or total contract value, or other things to bring into play.
Great. So yeah, we talked about the founder assistant. Richard talked about having someone or hiring people who can clearly replicate your process. What are your opinions on actually documenting this process as you start to hire? Are you actually building playbooks? Are you just building automation sequences, or what's the level to which you're actually like writing things down versus actually doing things? Richard, maybe we'll start with you.
Yeah, I think if you're writing something down and it's changing in the next week or month or 6 weeks, right, then you're still too early, and you need a bunch of entrepreneurial mindsets who can kind of go out there and work it out and sort of be in meetings and find the angle and and hustle basically. Whereas if you are starting to find that there is this repeatable process, and they could be subsets, right? That might not be the whole pipeline development. You might just get to second meeting and everything's kind of the same, and then things start to happen that go a bit, things start to be a bit more tailored to the customer requirements. Perhaps there's a product set that's slightly different, or contract terms, whatever. But if you're able to see that repetition, that's where we can start to document, and that's where you obviously want to see automate first, and then fill after second, as in find a head to do what you can't automate. So obviously you need to be able to document to be able to automate, and you need to be able to document to onboard. And if you can't do those two things, then that's where you're kind of looking to solve, I suppose, and improve the process, so it is something that works regularly, or we understand what the variables are. So yeah, I think documentation is really, and process. And I mean, documentation, not for documentation's sake, but having a process that you can't articulate, and the documentation is a tool to be able to articulate what you see, and to be able to then educate your team to be able to replicate. Then yeah, that's important for scaling, onboarding, and accelerating what you're doing. Otherwise, you're always going to be the person that's in the room saying, right, this is how it works, and training and all that sort of stuff always has to go through you. So hopefully.
Awesome. Gotham, any thoughts on that?
Yeah, completely. I think to Richard's first point, if you're changing the process every 4 weeks, 6 weeks, you're probably not ready to start like getting into we've made every mistake there is in the history of the world, I'm pretty sure. But we did exactly that, where 4 weeks into a new motion, we would build out HubSpot, put all the deal qualification stages, build out automation, automated emails, tracking, and just spend a lot of time and effort on this process, on this system, just for it to change completely 4 weeks later. And so actually just going to just good old classic Google Sheets, and until you're like not changing the columns, until you're using that same system, and until you're doing a stand-up meeting and it's the same consistently, then it's time to start documenting and building out those systems. So yeah, I think don't rush to it. Like, you should 100% get there, but like until you're build the lightest, most agile system possible, flexible, and then once that's consistent, then start like documenting and building out the infrastructure around it.
Cool. Yeah, so that's a great transition to
Kevin, I'll add from an investor
Yeah.
perspective. It depends on the type of investor you're going after. Of course, angels versus VC versus CVCs will have different expectations on documentation. And certainly the stage of where the company's at in their life cycle, of course, will be taken into consideration. But if you're speaking to a large strategic or an enterprise investor, they will, be mindful they will have expectations of sort of heavier documentation and process being defined earlier in the stage. And of course, they won't expect a full manual, if you're still refining and developing and trying to establish, product market fit. But they may have expectations for there to be more understanding and articulation of what you're currently going through and what the process is. I think it's just helpful to be mindful of the type of investor you're going after.
Great. And then, yeah, Gotham, you mentioned a couple tools there, just Google Sheets and HubSpot as the main ones. Do each of you have a favorite tool you've used outside of One Shot, obviously, to make the sales process more efficient or capable at this stage of growth? Whoever wants to jump in can feel free.
I can jump in. Yeah, I think apart from CRM, in general, early stage businesses, you need, so excluding One Shot, you need to be using tools like LinkedIn, Sales Navigator, filtering, understanding your market, lead lists, building lead lists, building out manual sequencing, like, doing some outbound in general, even though outbound has completely changed in the last few years, but just having an idea of your ideal customer profile, testing messaging. These are things that every founder, every early stage company should be doing. Like, what's my addressable market? What signals are being in? So as an example, One Shot targets early stage companies who might have a job rec out for an SDR. That's a really good fit for us, because we could, instead of spending 80K on an SDR, you can actually use our platform for half the price. So that's a really good signal for us. Or they have a sales team of 4 people, but they don't have any internal salespeople. That's another really good signal. So every business will have those specific things, whether you're in HR tech or like sustainability. They're like understanding what a good fit customer is. What is your ideal customer profile, and working that out. So yeah, like, you don't need to break the bank. LinkedIn Sales Navigator is $1,000 a year. You can use data providers like Apollo for $99 a month on a month-to-month contract. So yeah, just using some basic data providers. You can go more advanced. There's tools like Clay, which are really good. That's a bit more advanced, so don't necessarily have to go there yet. But yeah, those would be my recommendations.
Cool. So yeah, if we do stick simpler with the technology approach, it's easier for startups. But if they are have maybe received a very large round of funding, or they want to commit to some very advanced software, and they're hiring, they're trying to operationalize or standardize their processes, like some technology implementations can go wrong. So are there any pitfalls or ways startups can avoid technology implementation issues in this stage of growth? Richard, I know you've worked with a lot of different companies in this stage, so curious what you.
There's a real role for a commercially minded tech guy who is like managing the tech stack internally, because it is such a, if you draw an org chart of a scale up business, and we would then articulate the different tools that they use to communicate and manage workflow across them. And the fact that you're moving everything so quickly, I think the role itself, rather than the platforms, and there's lots of platforms and reasons to choose different platforms, but I think there's a real opportunity for somebody to step in and almost like it's not an IT person, it's a systems manager you see them in larger organizations, sure, but for the scale up that really understands the business. So I think that there's a real lack of investment in the implementation and management of tools. There's an opportunity there.
Cool. Can that be like, I guess you don't want that to be the founder necessarily, because it can be a high value activity, but they're focused more on building.
It's a very high value activity, but it's also can be very, I mean, Gotham talked about building out a HubSpot sequence and how long that took, and using Google Forms as a substitute, because, and for me, that's sort of activity. Yeah, we do want to build out sequences. We do want to be able to replicate what we're doing. We want to do things with, I don't know, is it Monday or HubSpot or whatever the tech is, the integrations. And so that role is high value, but it is time consuming. So you probably don't want it to be a founder itself, because it's, and you see a lot of sort of junior guys getting the nod because they're sort of tech savvy, but they don't get the business properly. They don't understand things. They're just responding to, I need it to do this, rather than thinking about it more strategically. Yeah.
Great. And then, yeah, Gotham, maybe not necessarily at one shot, but more at CloudBees, which is another prior experience, more later stage VC. Is there any insight you could give our audience into maybe implementing more technology at that stage, and were there any pitfalls with that, or ways to be as efficient as possible?
Yeah, I'd say when you're definitely more mature and the playbook's in place and you're scaling, definitely you like better access to reporting. So, especially if you're starting to managing sales teams of like 20, 30 people. Yeah, in the US, you're looking at how do you devise your territories? How many reps do you want per territory? How many accounts are available? What's the split of existing accounts, new accounts? So having, where I'd say less on the technology, but having a very good RevOps team that you can work with as your business partner has probably been like the difference between success and like failure. So there's two examples. There's a CD Network, small company. We grew from 1 million to 40 million in 3 years. I had immediate access to the RevOps team. We were working weekly on understanding where deals were stalling, how many days it took to win a deal, how many days it took to close a deal, what lead source was creating the best revenue, what industries were generating the most. So we were really data first. We created dashboards that the sales team could access to know like who was performing better against the others. And we created a really high velocity successful team. The role I went to after that was heading up sales at Akamai, who are a $10 billion market cap company based in Boston, a security software company. I had the complete opposite experience. Huge RevOps team, which I didn't have access to. So you would have to create a ticket, which would then go through a process. So a simple request to optimize the team through various reports was taking months. And in that time, so we just moved really, really slowly. So I'd say like having a good partnership within the organization with RevOps or technology implementation is a huge, huge, huge difference. And so like now as we build up One Shot, we keep it agile and obviously we're small still, so it helps us. But yeah, as we grow, I think that was a key thing.
Cool. And then, yeah, another good transition as we get into kind of dashboards and metrics. Sabrine, I'm curious how you think about, as you're looking at growth stage companies from an investment perspective, what are your favorite, I guess, metrics or qualitative indicators to say, hey, this sales organization is working and it's not just a short-term thing, it has lasting potential?
There are many metrics and indicators that you should look at, but just to name two, and then Gotham just also talked about a few of them in his response, but to name a few that are sort of favorites for investors is probably GDR and NDR, so the growth, dollar retention, and net dollar retention. So the percentage of recurring revenues for existing customers, excluding expansions, and NDR, net retention, is including expansion. So upselling and cross-selling. And those give together quite, I think, a good picture of the customer satisfaction and the financial health of the business.
Great. Gotham or Richard, do either of you have another favorite metric or anything else that you really like to look at kind of on a daily or weekly or monthly basis?
With the growth business, it's always a challenge for a founder to say, well, this is the target I'm setting, this is the expectations, and so sometimes those are, those sort of performance indicators and the targets associated with all the expectations are stretched because they expect I'm investing in these this person, what have you. So that's a challenge that I find that can be sort of managed a bit by looking at. In the UK, we call it a batting average. You guys would talk about a hitting rate or something in baseball, but if you think about an average over a period of time, and then working with the guys to work on strategies to improve that average, then you're then aligning where we're going, not just setting an expectation of this is fair and pass, but working towards it. And with the data and the RevOps sort of approach that we do now, that sort of data analytics is actually fairly achievable if you're very, very focused on what your core leading and defining, and success metrics are. So be it, meetings or proposals or whatever, so to the actual deal values or lifetime value or whatever. So that would be my little preferred go-to when I'm working with a team, working on their averages over a period of time.
Right. Yeah, and Sabrine, real quick, you mentioned, once you have customers, how much of that revenue are you retaining or expanding on? How much are you focused on like the pipeline conversion rate, especially in this age of like AI that can really bolster the amount of outreach and leads companies are interacting with?
Yeah, so look, I think conversion rates matters, but I think they can range a lot, just different industries. And so I think for me, it's more about just understanding what that sales funnel looks like and analyzing, the sales funnel, the different stages, the TAM, but also the reasons for why they've lost customers. I think that's just understanding some of their fundamentals of their process. There isn't a particular sort of conversion metric that I think we're beholden to. Conversely, on the GDR and NDR, of course, for the GDR, you want to be as close as you can to 100%, and for the NDR, you want to be, approaching or targeting 130 plus. So there's, investors will have different expectations depending on the metrics.
Great. Yeah, and then we're talking a lot about quantitative metrics, but is there anything qualitatively that is kind of a red flag from an investor's point of view that you see within the sales process or organization that has caused you to take a deeper dive or just walk away from an investment opportunity?
So look, diligence is always, I think from my perspective, incredibly important. So I'm a big believer in very sort of robust diligence processes, but investors ultimately want to see the ability for founders to be able to execute on planned on planned forecasts, and then also to scale sustainably. So for me, when you have high churn, even if it's sort of masked by good growth, but ultimately, there's an issue with the lower retention rates, that to me is a red flag. And then equally, if you have very unrealistic forecasts, to me, that shows that the management perhaps didn't have the experience or the understanding of the market to be able to deliver on that plan. So a lot of missed sales can also just be, historically, can be a red flag.
Richard, do you have any other thoughts there, having worked with a number of companies kind of in the stage?
Yeah, I mean, in terms of performance metrics, the way I sort of describe it, I see it is, it depends where you are in your journey. So if you're, if a founder's in early stages, they're like in a dinghy, they don't need much to know what's going on because they can feel everything, on a boating analogy, if that's all right. They can feel the waves, they can feel the wind, they've got their hand on the thing. But as soon as you move into a bigger environment, they've got to invest in being able to see what's going on in the business. And so obviously those top performance measurements from an investor is important, but it's the micrometrics that make those big numbers work. So understanding what it is that you need to do to drive the business forward, and so be able to articulate what are we measuring and why, without turning it into the, if you like, the tanker stage where you've got the big corporate and you need lots of data flowing and getting up into the to have corporate oversight. Do you follow me? So I think it's very much, where are you on that stage? What you want as little as possible, but then really focus in on those measures that you are reporting against. Otherwise, you're basically weighing, as they say, weighing the pig doesn't get it fat, right? You're just seeing what's going on. Yeah. So that was my views on it. So depending on where you are in the journey, you need to be really clear what you're measuring.
And I totally agree. I think as an investor, the one sort of perspective would be to tell your story, and I'm quite data driven, so having some metric or some data that you can point to that can help explain, if you're in the dinghy, you measure the wind, you're following this North Star. I mean, give some context to how you're being able to deliver on that plan, I think is very helpful.
Awesome. I have one more question to ask everyone. A reminder, if the audience has questions, feel free to submit them in the Q&A feature at the bottom of your toolbar in Zoom. Otherwise, we'll end up getting out of here a couple minutes early. So my last question is for everyone, if there's a specific, or maybe mostly for Gotham and Richard, but if there's a specific or major challenge or something specific you faced when transitioning or guiding someone through the transition from founder-led sales that you want to kind of leave our audience with, and kind of how you proactively address that challenge. I mean, one of the biggest things, Gotham, you mentioned you fail. You've made a lot of mistakes throughout the way. I think that's the quality of any successful startup. The worst thing you can do is just not do anything. So, is there something specific you want to leave the audience with today?
Yeah, I would definitely say, again, depending on the stage of where you're at, owning a portion of that sales cycle is really important. Like I speak to it, we sell to a lot of seed/Series A companies, and so I speak to a lot of founders, like on a weekly basis, maybe like 10 founders, 15 founders a week. And you kind of get two types of founders. You know, you might get a heavy technical founder, or you may get like an ex GTM heavily focused founder. So I'd say that what they both have in common, that what I'm saying, the highly successful ones, is they own a lot of that GTM function as much as they can. And these are highly technical people. So people who've never done sales before, never done marketing before, but they're getting their hands dirty, they're understanding how to identify their ICP, they're speaking to their customers, they're testing outbound out, they're turning up at events. And I'd say, like, what I've seen is those founders are typically, their businesses are probably healthier than the ones who are like trying to hire people super quickly, bring in these senior hires super quickly before they're ready, because they don't know what they need. So the problem is they'll be hiring people for a role and a problem that they don't actually understand themselves. So, and we've done that. We've hired marketing folks before we needed them. We've hired sales folks before we needed them. So I think we've now gotten to the point where I think sitting on the problem for not too long, but sitting on the problem and owning it, that's where the kind of the beauty of the solution comes out. So yeah, just don't rush to hiring until you need to. Yeah, and like I said, make sure it's a bottleneck. Understand the exact type of person you need to unlock that bottleneck, and not only unlock it, but take the company forward. So yeah, I'd say, like, the pain goes away after a shorter period than you think it does. And the solution that comes out of it is better than you thought it would be as well.
Yeah, to bring it back to Richard's thing, batting average, have a short memory. That's a baseball saying. But yeah, so Richard, what do you have?
I think, yeah, sort of on the point about, deciding, on your first sales hire, when and who specifically. The one thing I see consistently, which just sort of makes me laugh, if not cringe, the job descriptions where they're looking for this first sales hire. And what I do, that's a good signal for me that that's the sort of space that I want to be talking to these guys in. And so I'm interested in that, and I read it, and they're often looking for somebody who can do all the structure, the strategy, the mentoring. They're going to build the team to like 5 or 6, but at the same time, they've got to go off and they've still got to blaze a trail. And in my experience, those guys, if they can find them, are really good and probably too expensive for a startup or scale-up business, or they're just not available. And so I think you've got to be a bit smart around, do you want somebody who's going to go off and blaze a trail for you, and you're going to go and pick up the bits afterwards, but that'll be profitable and good, and those are good problems to have? Or do you want somebody who's more kind of sales ops mentality, that's going to build this, build out the CRM, build out the onboarding, and perhaps that could enable you as the founder, as the sales leader currently, to then sort of deliver on the domain knowledge and the ICP and the go-to-market strategy, all that sort of stuff. So I think there's got to be a real clarity there, and I don't think there's quite often, and there just isn't. There just seems to be looking for two different types of people.
Great, awesome. Sabrina, is there anything else you'd like to kind of leave as a closing thought for our attendees?
No, look, I think both Richard and Gotham has summarized quite well. Just an investor, my one, sort of caution is also, while all the considerations for the right timing for the company are always relevant, but the companies sit within a wider industry or market. So just make sure that the economic outlook is also supportive of that decision, when to transition and when to expand and grow the sales team.
Great. Looks like we covered everything because there's no other unanswered questions in the Q&A. So thank you again to our panelists and for everyone who attended today. As again, we recorded this, so you can expect that recording to be in your email as well as our website in a couple days. Great. Yeah, we'll give everyone 5 minutes back. So thank you again, Gotham, Richard, Sabrine, for your time today.
Thank you,
Thank you.
everyone.
Thank you. Thanks.
Awesome. Bye-bye, everyone.